Yeah, the first one I'm gonna tell them is, invest what you can afford to lose. Because I mentioned, I invest in cryptocurrency. So I break down my money. So like if I have $100 to invest, 10% of that money is only going to risky stocks such as cryptocurrency, because honestly, I don't understand it, but doesn't mean it doesn't make money. So, it's been making me money, but if it went down tomorrow, I probably still want to know why it went down, but I'm not going to be crying in my bed or anything, right? It's only 10% of my money. I understand the risk. So that's usually what I would tell them as well. It's like, hey, if you don't really understand it, like you can't tell me why the stock is going up. You can't tell me why the stock is going down. It kind of equates to gambling at that point. So at that moment, it's like, hey, Las Vegas rules, make sure you just not investing your mortgage money. And if you lose the money tomorrow, you're going to be okay. Like, because the anxiety is really high, especially for like cryptocurrency. You can see something drop in 20%. You can see something drop 50%. You can see it go up 50%, but you don't really know when to sell. You don't know when to get out of there, when to do anything, because you don't understand what you're doing in the first place. So it can really complicate anybody's.
That is great. So that leads to my next question. How do you go about, researching before you get into a stock? What do you look for in a stock before you
Yeah,
purchase it?
no, that's a real good question, man. So I break down my portfolio into like four different areas. 30% of that is going to large cap companies. So that'll be Facebook, Amazon, Walmart, index funds. So these are companies that have been around for a long time. And then I have middle cap stocks. Those are still pretty well known companies like Royal Caribbean, Carnival Cruise. They're just not as big. And then I do 3% of my money into real estate investment trusts. Those are companies that just own a lot of real estate and they have tenants across the nation. And as I mentioned, 10% risky. So the first thing I need to do, and this is what everyone should do, is decide what is your goal. So whether my goal is to say, hey, I want to invest in something safer, I'm going to look towards index funds. And for that one, it can kind of go, let's go down the line. So for index funds, those are the main one. The index fund is just a basket full of stocks. So it's going to own different percentages of each stock. So it might own 2% of stock A, 2% of stock B, so on and so on. So usually those are a little bit safer, because if stock A goes down, that's only 2% of your portfolio for that one. So usually index funds can be safer. And when I'm researching these things, I'm gonna say, okay, is this one meeting my goal? I'm going to Yahoo Finance to read all the recent articles. I like to use Morningstar. They're good to show you the finances in the back. And really, for the most part, I want to make sure that the revenue is still growing, make sure the expenses are at least staying the same or staying low. And I want to really look for any major red flags. So the red flags are going to be like bankruptcy, possible mergers, anything that I think could harm the company's value. That's something I will usually stay away from. And then, if it's meeting my goals, I've done all my research, then I'll probably go ahead and invest into it. And if it's doing well, I check in on on a quarterly basis every 3 months. I'll keep reinvesting back into it. Because it's kind of like if you find a golden goose, you want to invest more money into it, right?
Yeah.
Yeah. So it's the same. So if it's doing bad, I'll sell it if I need to, and then I'll go look for new investment, or I'll go back to my watch list of other companies I wanted to invest in, but maybe I just didn't have enough money at the time.
That's great. That's great. And would you say a better strategy is to dollar cost average is a better way to build positions in different stocks rather than just throwing $100 or $1,000 right away.
Yeah. No, dollar cost averaging, that's a really good stock. For those who don't know, that's pretty much, you just do this on a consistent basis. So every paycheck, let's just say $200, you invest $200 every paycheck. So you're going to invest that $200 at the highs of the market, the lows of the market, in the middle. And the idea is it should all average out. So for that one, I'm not going to say it's better, just because when it comes to investing, everyone has their own strategy. So that strategy might work for some, for others it might not. Maybe you want to get like a big payout on bonus time. That can be your only time you can actually invest. Maybe dollar cost average style is the best thing for you. When it comes to investing, there's like so many different strategies. but they all can make money at the end of the day. So, you got Warren Buffett. He might not do the dollar cost average, though he preaches it, but he's still making money too. But no, I do like that strategy. I think it's great, especially for beginners, just to go and get you acclimated to things in the stock world. And it puts the biggest principle at work, and that is consistency. So if you are consistent with your investments, like you just consistently invest into the same index fund that follows the market, 10 or so years, you'll be happy you did. But yeah, it's taking consistency, putting in time, that resource that we can never get back, and it's making that money compound for you over the long term.
That's great. So how would you advise for someone to get started in the stock market? They want to get started as soon as possible. How would you go about advising them to get in?
All right. Can I do my own plug for a course of mine?
No problem.
Okay, cool. I'll make sure I don't break no rules. So usually when people have questions about how to get invested in the stock market, I used to have to give this big explanation. So then I got tired of giving these big explanations because everyone had the same question. So I made a course for it. So it's the Investing Crash Course for Stocks. I think the minimum you can pay is $5, and then all the profits go to a nonprofit. So if you want to, I'll say start there, because that's probably the best course you're going to find for $5 to get you started. Now, for whatever reason, if you don't want to do that, I'm going to say YouTube it. Like YouTube and Google is our friends. For me, that's really how I learned about all this stock investing. Now, granted, when you're learning this information, you can do some of the good websites such as NerdWallet, Big Wallet, Investopedia, Yahoo Finance. And from there, you can teach yourself. Like if I can do it, I'm sure you guys can do it. I had I'm pretty sure I had a C average in high school, but even then I was still able to make some of this stuff work. So, I'm just saying I'm not the shiniest crown in the box or anything, but if you put the time in, you put the effort in, you keep at it, yeah, you can make those free resources work just as fine for you.
That's great. And you mentioned that you read some books. What some books have you read in terms of investing that's helped your journey?
The main one I was the Intelligent Investor. And that was honestly it, man. And I say that just because for me, I'm not much of a reader. So me reading books, it just wasn't happening. Hence why I had that C average in high school, not much of a reader. But, for me, the Intelligent Investor, that's the main one I read. The other ones I read was the Dave Ramsey. I think that's just good for financial sound and investing too. And the Millionaire Next Door, that's kind of how I got my name. That's good for investing too, in a sense, it just teaches you about consistency and dollar cost averaging. Outside of that, I've been listening to a lot of podcasts. I do my own podcast now. And most of the times I'm just reading articles, if we can count that as books. But yeah, if you go to Yahoo Finance, go to that, go to balance.com, just use Google. Honestly, type in, how do stocks work? There's gonna be so many resources that come up. I mean, the amount of information we have here is tremendous. So really, you can get started at any time. I think it's just a matter of, do you actually want to get started, and are you going to stick through with it?
Yeah, that's definitely true. That's definitely true.